Hey guys, welcome back to another video by Fully Informed Trade, knowledge for everyone. My name is Alex and I'm just going to go ahead and review the stock market, some commodities, and the Forex market a bit as well. So without any further delay, let's go ahead and review these key charts. Right now, I really don't have that much time to talk. I only have like around 11 minutes to work with in this video, so I'm going to be talking really fast and I'm going to be glossing over some key details. But just bear with me as I will cover the basics and the most important information. Right now, we do have the dollar index pulling back. Even with fears in the Middle East, the dollar index continues going lower. My theory on it is basically China converts a lot of their Chinese yuan and just converts it and dumps it into the US dollar. That in turn makes the Chinese yuan weaker or artificially weaker. That's pretty much currency manipulation right there. And what happens then is that the Chinese economy inflates at a ridiculous rate. Imports are really expensive on the Chinese end, but on the US end, imports for us is extremely cheap out of China. So that's the whole strategy here. But the key thing that I do want to point out is that once China gets those US dollars, they basically convert those US dollars into the euro. And that in turn makes the US dollar very, very weak to the euro, and it benefits China at a maximum because the Chinese yuan is inflating so fast that later on, once they take their euros and convert it back into the Chinese yuan, those euros will have so much value by then that it's the best thing that China can do to fight off inflation with its own money. And that's brilliant and all, but at the same time it does have a negative impact on our US dollars. And I just want to point that out to you guys. And I'm just going to go ahead and review to you guys right now that typically when the dollar index goes up, you'll see the stock market go down. Right now, since we have Middle East fears, the stock market is so overbought. These correlations at this point kind of doesn't matter, but you'll probably see it matter a little later on once we get down to this multi-year support level, which is at around $76. We hit that, we finally bounce off of that, and eventually anticipate stocks and commodities to pull back, one of them being silver. So we just want to go ahead and point out the $76 level, as it is going to be very important for the dollar index. If that's broken, the Great Wall of China is down, and we are in for a heckish, long, terrible, just a terrible ride on the dollar index, because it will go lower if it can't hold at $76. This is our last line of defense. I guess you could call this the dollar index's wall of dollar, or dollar index wall of China, or whatever. Anyway, let's go ahead and review the next chart, which is going to be the Dow Jones Industrial Average. I'm going to point out key things to you. Previous resistance becomes future support. Previous resistance was at 12,000. Now it's going to be a strong support level. Support was hit at 12,000. It bounces off that on today's trading session. I did want to point that out, and I did point it out to you guys while I was trading earlier today. And basically what happens is that it bounced off the 12,000 level and it continued going higher. 12,000 was a key area of support. Anybody who was shorting at that level got suckered, and you know, that's the nature of markets. Don't be stupid. Watch for those support levels, especially if you are a scalping trader. Alright, next let's go ahead and review the next chart, which is going to be the SPY. SPY does have some really strong support at around 130. Remember, strong resistance at 130, then does become future support at 130. We are touching that 130 level. 130 is getting hit pretty, it broke it into it a little bit, but then it bounced right back off of it. I would be skeptical if, you know, I wouldn't be too surprised if the S&P continues going lower. And the main reason why I'm not going to be surprised is because this market has been overbought for so long. I mean, you guys, this market has been embedded for like forever. I mean, since January almost. I mean, this market has been rallying non-stop for almost an entire 6 months, and it wouldn't be no surprise if this market were to eventually pull back, and it finally has. It just couldn't hold on to its breath any longer and decided to exhale, and that's exactly what's going to happen. If it exhales, this market will go lower, and right now we have this bottom area of the channel, but you know, even if this is broken, chances are we can anticipate a pretty strong correction on the degree of a 10% correction. So we would anticipate something at the very worst, maybe, you know, something around 120, you know, if it breaks that flag pattern. This pattern is very important, for if it is broken, markets will go very low down to the 120 area, which would equate into my worst case scenario 10% correction target. That's when I would really consider buying back into a lot of names, because it will become very cheap at that point. Alright, moving on, let's go ahead and look at the crude oil market. Crude oil market did have a pretty major pullback. This would have been a great intraday scalp. You know, the longer the trend line, the more viable it is, the more logical it is to go ahead and short once you see it break below. Now, I do want to point out the fact that crude oil has gone lower, mainly because things have eased up a bit in the Middle East, and you know, it is a bit event-driven. And because that, and if it continues pulling back, and we don't see anything major out of Saudi Arabia, I do find some really attractive plays later on in this video, which I will point out. Now, here's my total outlook on what happens to crude oil. Basically, when you see crude oil go up in price, you have less economic activity, and less economic activity is bad for us U.S. citizens because every time we have to spend more at the gas pump, that means we get to take home less so that we can spend money on our kids. Or I don't have kids, but yeah, I'm assuming some of you guys do. And you know, spending less money on the house, spending less money on discretionary goods, clothing, gadgets, gizmos, whatever the case may be, it's generally going to have a negative impact on the economy. So that being said, you know, less economic growth is one negative impact of higher oil prices. Another thing is that as oil prices go up, that in turn causes inflation. As goods transported rely on crude oil to be transported on, you need gasoline, and if the cost of transporting goes up, that in turn will actually hamper or damage the consumer's ability to buy these products, as they will go up in price. And of course, overall, the economy is negatively impacted as GDP does go down, and we are a net importer of oil, which would do us no favor as our dollars would be exported to foreign countries where they get to sit on piles and piles of of our US dollar as they sell us this expensive oil. So which is kind of bad. Something bad happens out of Saudi Arabia, do you know that that crude oil could easily go up by 10 bucks? But if nothing bad happens, and if we can keep that for at least the next day, I think we got some cool things going on in the oil market, and oil stocks in particular. Let's go ahead and look at the next chart, which is a silver spot. Silver, I did recommend a buy on this, but that was at around $28, guys. That was way back then, you know. I mean, it's already gone up by six bucks at the very most, at around 34. Right now, I do think that it's a bit overbought, and if it does pull back, don't be surprised, guys. But it's probably just going to be a minor pullback, and it will probably touch 30 bucks. As far as shorting it, I don't know. I mean, you could do it. You do kind of have a good risk to reward ratio there because it is a bit overbought. But I really wouldn't try and push it too much. That $30 support level is a multi-year support level. I do want to point that out, that it's an 8-year support level. Yeah, 8 years or something like that. So that being said, just watch that support level very closely. I do think that it will hold for a little bit. And you know, if it pulls back a bit, don't be surprised. It will touch the support, and you could go ahead and cover your position by then. Alright, let's go ahead and look at the next chart, which is going to be Delta Petroleum. This is a company I recommended back a couple months ago, I think. And pretty much you have, I recommended it somewhere around 74 cents or something, with a stop at around 70 cents. It's already up by around 86 cents. I made a couple bucks off it. I think it was a 15%, maybe around, yeah, somewhere around 15% gain on it. So pretty good trade right there. I want to go ahead and review the next chart, which is Cisco Systems. Cisco has had a pretty bad pullback. Now, as far as I'm concerned, could this be the worst out of Cisco? Well, I do think that there is some opportunities coming out of Cisco. I don't really want to say that it's it's not risky. It's pretty risky considering that it is an $18 stock. But I do want to point out some key fundamental data as far as Cisco is concerned. Cisco, I think, is a bit undervalued right now. I don't think the valuation is very justifiable, judging by the fact that it has a pretty good competitive advantage over its competitors. It does dominate the router market, and its price to earnings is at around 13, 14. That's a 14 PE ratio. And you know, the technology sector on average gets a 22 PE ratio, and communication equipment gets 25 PE ratio. So pretty much, I think the stock is trading at half of its true intrinsic future value. Maybe more, maybe less. Give or take, I do believe that we could anticipate a reasonable valuation somewhere at around $22. So a buy-in right here wouldn't be a bad idea, although I would be a little patient. Just keep your eye on Cisco. A buy here wouldn't be bad. We are trading into a channel, and you are buying at the lower edges of a channel, which gives you a favorable position to be in as far as channel trading is concerned. Alright, let's go ahead and look at the next chart, which is going to be Hewlett-Packard. Hewlett-Packard is oversold, I mean, to the extreme, guys. Hewlett-Packard has an 11 PE ratio, but its forward PE ratio is dismal. In fact, it is so bad that it is no surprise that this stock is down the gutter. Now, does that mean that I think that this valuation is reasonable? I don't really think it's that reasonable. If you guys see a bid back into this market to make the price more reasonable, I'll probably take the opportunity to go ahead and buy into it, hold it, and just put a tight trailing stop on it so that if you ever run into a decent pullback on it, you'll get to keep most of your profits. Alright, let's go ahead and look at Glue Mobile. This stock has been hyped up quite a bit. I do anticipate a major pullback in this Glue Mobile stock. You got this topping tail pattern, you got this red engulfing chart pattern. This stock will fall like a brick. I don't really think that Glue Mobile has a very attractive or reasonable evaluation of value on it right now. I think people have overbought it a bit, and I think that it's going to roll over. And what I mean by roll over, I don't think that it's probably going to go all the way, probably down to wherever, maybe $1 or something, but it will pull back substantially and then roll over, go sideways a bit, like something like this. I mean, maybe if you see a huge sell-off, you'll probably see it go down rapidly and then it will go sideways for a while. That's what I anticipate out of Glue Mobile. And because of that great short opportunity, if we short it, we'd probably put a pretty tight stop. Maybe if we go ahead and look at the 5-day chart, maybe a stop at around $4.40 with anticipation of a chart pullback somewhere down and around the $3, and yeah, maybe even down to the $3 area wouldn't be a bad area as well. So that's pretty much what I anticipate out of it. That would be a 40% gainer if it does go that low. So that being said, no, more like 30% gainer. Let's go ahead and look at the next chart, which is Blue Dolphin Energy. This is an inverse hammer of mega proportions. I think this is a great opportunity. If crude oil goes lower, this would be an awesome short opportunity. As you guys can go ahead and see, this stock has just gone up so far so fast in such a short period of time. It would be no surprise if it pulls back and rolls over a little as well and trades a bit sideways. If it trades a bit sideways, you can anticipate it. I don't really know where it would find support at, but a short opportunity would be great. Put a tight trailing stop on it because you don't know where support is at. You're just going to see a bid come out of the stock out of nowhere, and yeah, I guess your trailing stop will go ahead and stop you out of it. Maybe a 5% trailing stop would be reasonable, and a pullback, I think that's something reasonable to me. Maybe somewhere around $5 would be reasonable. I really don't know. All right, let's go ahead and look at the next chart, which is going to be Royale Energy. This is a humongous inverse hammer. And again, if oil prices go down again, this stock will have a pretty decent pullback on that, which makes it a great short opportunity. That does it for me for today, guys. I will go ahead and review more for you guys in the weeks and months ahead. If you guys want to use the same charting software that I use, please be sure to go ahead and check out the link right below this video. Take care, guys.